A mortgage lender looked a single mother in the eyes and told her to get a boyfriend to buy her house. That actually happened. And when you hear the full story, you're going to understand exactly why so many hardworking Americans feel completely invisible in today's housing market. She works 2 jobs. 2. She is raising her child alone. She has no family safety net, no parents to call, no co-signer waiting in the wings. She just wants a 2-bedroom house. Nothing with a pool. Nothing in a fancy neighborhood. Just 4 walls, a roof, and a little bit of peace. And the person sitting across from her at a lending institution, someone who is literally paid to help people navigate home buying, told her to find a romantic partner to finance it for her. Let that sink in for a second. Because this story is not just about one woman and one terrible lender. This story is about a housing market and a financial system that was never actually designed for people like her. And if you are single, if you are a woman, if you are a parent doing it alone, if you grew up without generational wealth or a family with resources, this video is going to speak directly to your situation. So stay with me, because we are going to break down what happened, why it happened, and most importantly, what you can actually do about it. Let's set the scene so you understand exactly what this woman is up against, because the numbers here are brutal and they deserve to be said out loud. The median home price in the United States right now is hovering somewhere between $300,000 and $400,000 depending on your market, with many cities pushing well above that. To qualify for a conventional mortgage on a $300,000 home with a modest down payment, most lenders want to see a debt-to-income ratio below 43%, a credit score ideally above 620, and enough stable income to cover monthly payments that, with today's interest rates, could easily run $1,500 to $2,000 or more per month, before you even factor in property taxes, insurance, and maintenance. Now layer on top of that the reality of working 2 jobs. 2 jobs sounds like a lot of money, until you realize that many people working 2 jobs are working in service industries, retail, caregiving, food service, fields where each individual job pays somewhere between $15 and $20 an hour. Even working 50 or 60 hours a week across both positions, after taxes and childcare, a single parent might be clearing between $35,000 and $50,000 a year in take-home pay. In many housing markets, that income level simply does not qualify for the kind of loan needed to purchase even the most modest home. And lenders know this. They see it every single day. So what did this particular lender do with that information? Did he talk about first-time homebuyer programs? Did he mention down payment assistance grants? Did he bring up USDA loans for rural areas or FHA loans with lower down payment requirements? Did he ask about her credit score and whether there were steps she could take over the next 12 to 18 months to strengthen her application? No. He told her to ask her parents. And when she explained she has no family, his follow-up advice was to get a boyfriend. That is not financial guidance. That is not a mortgage consultation. That is a dismissal dressed up in professional clothing. And here is the part of this story that hits the hardest. Because she said something that a lot of people in difficult financial situations have felt, but rarely say out loud this clearly. She said she has heard her whole life to just ask her parents. Whenever money gets tight, whenever the math doesn't work, whenever she's staring down a bill she can't cover or a goal that feels out of reach, the assumption is always that there is someone, a parent, a relative, a partner, a safety net of some kind. And for millions of people in this country, that assumption is simply wrong. There is an enormous and rarely discussed financial divide in America between people who have what economists call family wealth transfers, meaning gifts, loans, cosigns, inheritances, rent-free living situations from family, and people who have never had access to any of that. Studies consistently show that a significant percentage of first-time homebuyers receive financial help from family members for their down payment. When you are someone who has never had that option, you are not just climbing a hill. You are climbing a hill while other people are getting a running start from halfway up. This woman knows that. She has lived that. And sitting across from a lender who couldn't even be bothered to offer real solutions before jumping straight to find a man to pay for it, That is a specific kind of exhaustion that goes beyond frustration. It is the exhaustion of being unseen over and over again by a system that was not built with you in mind. Now let's talk about what she should have heard in that room, because the information exists and she deserved to receive it. First, FHA loans. The Federal Housing Administration backs loans that allow down payments as low as 3.5% for borrowers with credit scores of 580 or higher. On a $200,000 home, that is $7,000 down instead of $40,000. That is a completely different conversation. Second, down payment assistance programs. These exist at the state level, the county level, and even the city level in many places across the country. Some are grants, meaning you never pay them back. Some are forgivable loans. Some are interest-free second mortgages. The National Council of State Housing Agencies maintains a directory of these programs, and many of them specifically target single parents and low to moderate income buyers. If her lender did not mention a single one of these, he was either incompetent or he made a decision in the first 60 seconds of that meeting that she wasn't worth his time. Third, USDA loans. If she is open to living in a smaller town or a rural area, USDA loans offer zero down payment options for qualifying borrowers. Zero. That program exists. It is real. And a good lender would have asked questions about her flexibility on location before writing her off entirely. Fourth, housing counseling agencies approved by the Department of Housing and Urban Development, HUD, offer free consultations where trained counselors help potential buyers understand their options, improve their financial profile, and identify programs they qualify for. This is not a replacement for a mortgage lender, but it is often a better first stop, especially for buyers who have been told they don't qualify and aren't sure what to do next. Fifth, and this is a longer play, there is such a thing as a mortgage readiness timeline. If she does not qualify today, what would it take to qualify in 12 months? In 18 months? That might mean paying down one specific debt to lower her debt-to-income ratio. It might mean disputing errors on her credit report. It might mean switching one of her jobs for a position that pays slightly more and offers more stability in a lender's eyes, since employment history matters. A good lender walks you through that roadmap even when they can't close a deal with you today. Here is the lesson, and I want you to hold on to this, because it applies whether you are in her exact situation or just beginning to think about home ownership yourself. A lender saying no is not the housing market saying no. One person in one office giving you bad advice on a Tuesday afternoon is not your final answer. The mortgage industry, like a lot of financial services, rewards people who already have wealth and penalizes people who are building it from scratch. That is a real and documented pattern. But within that system, there are programs, pathways, and professionals who genuinely want to help people who have been overlooked. The move is to find those people and those programs instead of accepting the dismissal as truth. If you are a single parent exploring home ownership, start with your state's housing finance agency website. Search your state name plus first-time homebuyer programs, and you will find a list of options specific to where you live. Then, find a HUD-approved housing counselor, which you can do for free at HUD.gov. They will look at your full picture, income, debt, credit, savings, and tell you honestly what you qualify for and what steps would improve your position. And if a lender ever dismisses you, talks over you, or suggests that your path to home ownership runs through another person's bank account rather than your own hard work, leave. Get up, thank them for their time, and walk out the door, because that person is not a resource. They are a waste of your time. There are lenders who specialize in working with first-time buyers, single-income households, and buyers without generational wealth. Seek them out specifically. Ask in local Facebook groups, ask in Reddit home buying communities, ask your real estate agent if you have one. Word of mouth finds the good ones. You deserve real answers, not platitudes, not condescension, not advice that treats your independence as the problem to be solved. If something like this has happened to you, if you have been dismissed, talked down to, or handed impossible advice by someone in the financial world who should have known better, drop your story in the comments. This community is full of people navigating the exact same system with the exact same obstacles, and sometimes just knowing you are not alone in it is the first step toward finding your way through. And if this kind of content is useful to you, real stories, real information, no fluff, hit subscribe because we cover exactly this every single week. Your financial future deserves more than bad advice. Let's build it for real.